They're the ones that own the 3 acres on the beach in Palm Beach that's worth $250 million right now. That's what they're buying. And why? Because they know that everybody else with money in the world is going to be competing to buy that from them if they ever want to sell it. And because it's scarce, desirable. Now, the perfect capital asset is something scarce, desirable, and portable, durable, maintainable. Right? And what is that? That's Bitcoin.
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discusses Bitcoin and crypto. In the past year, Bitcoin prices have experienced a remarkable surge of approximately 175%, reaching a staggering $30,000. After the U.S. Securities and Exchange Commission gave their approval to multiple spot Bitcoin exchange traded funds in January, the demand for these ETFs surged dramatically in March. As a result, Bitcoin reached an unprecedented all-time high of over $73,000. Two significant ETF records were achieved simultaneously. In March, Bitcoin reached new all-time highs. The funds experienced their highest daily net inflows of $1.05 billion and saw 17 consecutive days of net inflows. On Tuesday, June 4th, the funds recorded their second highest daily net inflows, drawing $88.675 million, just shy of the record set on March 12th. This was followed by another day of significant inflows on Wednesday, with combined net inflows of $488 million. On Wednesday, there was another day of inflows for the funds, making it the 17th consecutive trading day of such activity. This sets a new record, surpassing the previous one set in February. Eric Balchunas, a senior analyst at Bloomberg ETF, provided this information. In the spot, Bitcoin ETFs are currently seeing a surge in demand, with investors showing strong optimism. It is worth noting that this wave has the potential to surpass previous ones and have a greater impact on Bitcoin prices. Institutional investors have displayed a strong interest in spot Bitcoin ETFs, indicating a growing demand. As a result, Michael Saylor, the founder and executive chairman of MicroStrategy, foresees a prosperous decade ahead for the largest cryptocurrency, predicting a gold rush between 2024 and 2034. In a recent interview, Saylor addresses a common question among potential investors. Is it too late to invest in Bitcoin in 2024? He provides an interesting analogy to shed light on this matter. Saylor compares investing in Bitcoin now or in the future to buying property in New York City many years ago. He explains that even in 1776, more than a century after its founding, those who wanted to buy property in New York might have felt they were joining the party late. However, people have continued to invest in the city and earned significant returns for hundreds of years. This analogy highlights the potential for long-term growth and profitability in Bitcoin. It seems that some individuals believe that a similar trend will occur with Bitcoin. There are those who purchased the cryptocurrency when it was valued at less than $100 per coin, while others acquired it at a staggering $10,000 per coin. It is anticipated that a significant number of people will join the market when the price reaches $100,000 or even $1 million per coin. As a result, investors at various levels stand to make substantial profits. And lots of things Michael Saylor discusses, so please watch the video to end. And share this video and subscribe our channel Everyday Finance. Thanks.
It depends on what it is. I mean, the truth is the only thing I advocate is if you have a portion of your portfolio that if you have money you don't need for 4 years and you want to hold it for more than 4 years, for between 4 years and the rest of your life, that's your long-term investment portfolio, then you take a portion of that and you buy Bitcoin, which is digital property. If you want a diversified portfolio, I would say you buy some rental real estate or some real estate you're going to hold as a store of value. Maybe you buy a market basket of high quality stocks that you think will last for a decade or decades, or you buy the S&P index. And then you buy collectible items, trophy assets you want to hold your entire life, right? That's normally what goes in that basket of long-term assets. I think the apex property of the human race is Bitcoin. Bitcoin is Manhattan in cyberspace. If you think about investing in Manhattan as a good metaphor, the question is it too late to invest in Manhattan? Well, was it too late in 1680? No. Was it too late in 1776? No. Was it too late in 1865? No. Was it too late in 1914? No. 1945? No. 1976? No. 2000? No. What is the story of, and why is that, by the way? It's because Manhattan's built on an island. There's a limited amount of land. It's the nexus, the commercial center of the North American trade network or the Western trade network. Everybody with money and power wants to go through or needs to go through Manhattan at some point in time. That's been the case for hundreds of years. Everyone that ever bought real estate in Manhattan bought it from someone that paid less for it than they're currently buying it for, right? Mm-hmm. And why does it keep going up? It keeps going up because we keep printing more currency, right? So scarce, desirable assets go up forever. And in this case, is Bitcoin safer investment than Manhattan? I think so, because Manhattan competes with Tokyo and London and Paris. And Manhattan is just a physical city. Bitcoin is the center of the digital commerce or of the digital economy. It's like the capital city. It's the nexus point of the entire digital economy. And it has appealed to everybody on earth speaking every language. You could think of it as a city that's 276 blocks high.
After the ETFS launch, Cathie Wood has garnered considerable attention for her insightful predictions. The future price of Bitcoin. Given the approval from the SEC, it is clear that we have received the necessary institutional green light. Reluctantly, despite our thorough analysis, it appears that if institutional investors gradually increase their allocation to Bitcoin to just over 5% of their portfolios, as we anticipate, this adjustment would contribute an additional $2.3 million to the projection. I recently shared with you the information presented at an investor data conference in New York. The latest prediction is more optimistic compared to the beginning of the year. In January 2024, it was mentioned that Bitcoin has the potential to reach $1.5 million by 2030. The probability of this bullish scenario has increased, especially with the recent SEC approval. This approval can be seen as a positive signal before the potential approval of the spot ETF. Additionally, it was predicted that Bitcoin could reach $1 million by 2030. Wood's investment thesis on Bitcoin is based on the idea that if institutional investors allocate 5% of their portfolios to Bitcoin, the price could potentially reach $3.8 million. However, it is unlikely that this will happen by 2030, despite the significant increase in institutional adoption in 2024. Achieving this prediction would require unprecedented changes in the institutional landscape. The forecast for 2030 also takes into account the next Bitcoin halving, which is expected to occur in 2028. Historically, Bitcoin halvings have been followed by higher highs and higher lows. If this pattern continues into 2030, it is possible that the price could peak around 2029 or 2030, potentially aligning with Wood's price prediction. If Wood's prediction is correct, and Bitcoin reaches $3.8 million, a $100 investment in Bitcoin today would be worth $5,510 in 2030. This translates to a compounded annual growth rate of over 95%. While the prediction is bullish, it is important to consider other factors as well. Bitcoin has shown an impressive 14-year TGR of over 220%. This suggests that it may not be completely impossible to achieve, although, as Wood pointed out, it would probably necessitate significant institutional investment. Let's get back to Michael Saylor interview.
276 blocks wide, 276 blocks deep. That is the integer cube root of 21 million. And when you're buying one Bitcoin, you're buying just one of those blocks. That's how many there's going to be for 100 years, 1,000 years. No one expects there to be any more. And why is it a useful thing to buy? Because it passes the Bernard Arnault test. The Bernard Arnault test says, I have a lot of money. What should I invest it in? I should probably buy something that someone richer than me, more cultured than me, smarter than me, will want to buy from me in 10 years. So when you look at the things you own in your portfolio and you think, will the smart money or will all of the global, intelligent, wealthy class, will they want to buy that from me? And if it's Picasso, probably yes. If it's 25 blocks in the middle of Miami Beach or 25 blocks in the middle of Manhattan, probably yeah. Right? If it's the Magna Carta, probably. Maybe it's a trophy asset in a civilization. But Bitcoin is the most popular, most well-known financial asset in the world that is an investment. Right? I mean, it's second to the dollar, I suppose, as a pure financial thing. Everybody knows the dollar, but the dollar is not going up in value measured in dollars. So the dollar is only an investment asset for people in economies with hyperinflation. If you went to 10,000 rich families and you said, how'd you get rich? Not by buying dollars. How'd you get rich? Not by buying gold. Now that you are rich, what are you going to buy? Dollars? No. Gold? No. What are you going to buy? A sports team? Maybe. Right? Leonardo da Vinci paintings? Maybe. The Magnificent Seven stocks? Maybe. A Bitcoin? Digital property? Maybe. The one thing that's for sure they'll say is property. I own buildings and property in London, Paris, Tokyo, New York, San Francisco, LA, Miami. They're the ones that own the 3 acres on the beach in Palm Beach that's worth $250 million right now. That's what they're buying. And why? Because they know that everybody else with money in the world is going to be competing to buy that from them if they want to sell it. And because it's scarce, desirable. Now, the perfect capital asset is something scarce, desirable, and portable, durable, maintainable, right? And what is that? That's Bitcoin.
Bitcoin could potentially reach a crucial price point in the near future. At a crossroads, the average price is calculated across 3 different options. The timeframes have now fallen within a tight cluster, indicating a potential breakout. This comes after a period of coiling pricing actions since March. The Bitcoin trend model has triggered Real Vision's attention. The United States-based spot Bitcoin Exchange Traded Funds, ETF, experienced a significant increase in net inflow, reaching 8,866 million, making it their second best ever joint net inflow day. The Fidelity Wise Origin Bitcoin Fund FBTC had the largest inflow at $78.75 million, according to early data from Farside Investors. The ARK21 shares Bitcoin ETF, on the other hand, performed well and had a net inflow of $38.75 million, marking the highest inflow since March 12th, when they recorded a record-breaking $1.04 billion. Bitcoin reached a record-breaking high of $73.7 million on its 7th day as a spot ETF, according to Bloomberg ETF analyst Eric Pines. Today was a significant day for the Bitcoin ETF bar #Texas, which entered the market later than its competitors and has faced challenges in attracting investments. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.